Welcome to the Techno Fundamental Report for February the 9th. You know, with technical analysis, it's quite simple. I mean, all you're really looking at here with this graph, now this is the NASDAQ going back to 1980, 1981, but the only thing about technical analysis that you really need to understand is if you go from the left side to the right side, is the trend up? Now, I thought this was some interesting statistics that I saw over the weekend, and it was basically saying that when the NASDAQ has a 10% monthly gain, which in January we had a 10.7% increase, what happens after a decline in the prior 12 months? So for the last 12 months, we went back to 1974, and you can see all these down years, down 12-month periods, and then when you had a month that was up more than 10%, a year later, the average return was around 22%. Now, it's an interesting statistic if you also take out the bear market. Now, if you see here, this is quite a bear market. This is the dot-com bust right here. This is the financial crisis. So if you notice here that the only real exceptions to this whole thing, this whole statistic, was that bear market of the dot-com. So if you take the dot-coms out, you really get quite an interesting number as far as percent of positives. So in other words, percent of positives with the dot-coms is 73%. Without the dot-coms, it's 100%. So basically what it's saying is we're probably statistically, historically, if history repeats itself, we could have a very good year this year. Now also I wanted to take a quick look at some other graphs. I went back to the dot-com bust. Here's the dot-com bust right here. You can see, and now what you have to notice here is how all these moving averages get all entangled, and you start to break down below the moving averages, and boom, you go into a bear market. But then the mirror image of the bottom, if you do a mirror image, again, you're getting all this tangling here that it comes out of, and then you start to get smooth lines. So if we also look at the bottom in '09, which was the financial crisis, again, you see the same issue here where you're getting all the tangled moving averages, breaks down, but then the mirror image, you start to get the exact opposite. So where are we now? Right now, we're starting to come out of the, we can see here. Now, this is what we're looking for. This was 2020, 2021. You can see here then at really the very beginning of the year in January of 22, really big breakdown. Everything started to get tangled, coming down. Now we're seeing kind of a mirror image of that, and we're coming out of it. So things are starting to look more positive. So just to kind of take a look at 5 indexes, we look at 5. NASDAQ continues to be up the lower moving averages. Lower moving averages have turned up, and we're above that 200-day moving average. Now in the mid caps, which has been one of the stronger groups, you're seeing the same pattern, and definitely above the 200-day, and moving averages have turned up. Here's the New York Composite. You can see the uptrend. Here we have small caps. The small cap stocks are in an uptrend, and the S&P is in an uptrend. So we're starting to see some positive trends here. Now I did want to point out we are on new highs on the S&P 500. We're still staying down below 60. I would really like to see new highs pick up. That would really somewhat confirm that we've put a bottom in here. Now you can see here on just looking at the 200-day moving average, the S&P is doing fine. We've got an uptrend going here. Hopefully it lasts. NASDAQ, same thing. We've got an uptrend above the 200-day moving average. Looks good. Aggression index, we're above both moving averages. This is where we're comparing. We're doing a very simple ratio here of technology stocks to consumer staples, or technology to toilet paper, toothpaste, that kind of thing. Now you can see here we've broken out above the moving average. The lower moving average is turned up. Now on this particular one, we're comparing the NASDAQ to the S&P. Basic same story. So this indicator, the aggression index, is now on a buy signal. Now, if we look at interest rates, our 3 economic indicators, you can see here rates peaked back here in October, trending down, got real close to breaking that 200-day moving average. This week, though, rates have kind of popped back up again, and the market's been kind of sloppy as a result. Oil continues in a downtrend. However, we are getting somewhat of a short-term bounce. Financial stocks are looking good. They are in an uptrend. As far as new lows go, very much under control here. We're seeing less than 40 new lows for an extended period of time. This is very positive. This is semiconductors. Just wanted to kind of take a quick snapshot of the semiconductor stocks. They tend to lead the technology group. You can see that the semiconductors are now in an uptrend. This is natural gas stocks. I don't know, the price of natural gas has really been dropping, and as you can see, the downtrend in the natural gas fund, which kind of gives you a feel for what's going on with energy right now. Utility stocks, again, like the consumer staples, utilities tend to be very defensive. Now, we don't want to see anything going down, but at the same time, if anything's going to go down, we want this group to go down because that means the money is moving over to more of the growth area. Now, I did want to feature this stock as our fundamental study here. This is United Rentals. We've talked about this stock before. It's really been acting quite well in a nice uptrend here, consolidating. A breakout above 460 would be interesting. When we look at their financials, they're excellent. Profit margin 18%. Return on equity 32%, very strong. Positive cash flow. They've got $106 million in cash. They've got a current ratio of 1-to-1, which would be better if it was 2-to-1, but it's still, it looks like to me because of their positive cash flow, even though they've got debt, they're able to service the debt, quite well. So the numbers on this company are pretty positive. Their most recent quarter, which was the fourth quarter, was up 19% and earnings were up 33%. To me, when it comes to safety, a profitable company is about as safe as you can get. Now, we wanted to take a quick look at who the CEO was. His name is Matthew Flannery. He's been in the business for a long time, over 30 years, went to Hofstra University. But I think the most important thing, and if you remember last week we talked about exceptional CEOs, that their capital allocation skills, their ability to manage the balance sheet was really the most important thing. So what the board has said here is that he has demonstrated strategic, operational, and financial acumen that the board believes has been a significant value to the company. So he is in the right place as far as knowing what to do. So if you have any questions, please let me know. Thank you very much.